Hello guys, and welcome back to my YouTube channel. This is your boy Letabo Mampana. Thank you very much for stopping by. If you haven't already, please make sure that you do click that subscribe button. Make sure that you also do click the notification bell on so that I can send you notification each and every time I post a new video. Okay, so on today's video, what we will be talking about is how I use Fibonacci retracement. Basically, this video is about those who are willing to take risks, or rather to take new opportunities in trading forex. So the beginners who are not familiar with the tool Fibonacci, this is what I will be covering on this video today. So what I would like us to talk about is how it works and how you can trade using the Fibonacci. If then you don't have any strategy or you don't have any tools that you can use at the moment, so this is the best tool that you can try out and maximize your trading result while you keep practicing. Okay, so I'm just going to hop into my drawing board so that I can show you how I use it, and then afterwards I will illustrate it on the live charts on the forex market on MetaTrader 4. Okay, so let's just go about and see how it's done. Okay, I'm now on the trading pad. So when you hop into the MetaTrader 4, let's say for example you switch to Euro USD, for example, and you find that it's on a downtrend or on an uptrend, because when you use the Fibonacci retracement, you need to identify a trend. Firstly, what you need to do is, once you get into a certain currency pair or the currency pair of your interest, you need to establish a trend, because you cannot you cannot basically plot Fibonacci retracement tool where else the market is not trending. You cannot plot it on a chopping market. You need to make sure that you get a clear trend, either being uptrend or a downtrend. It has to be a clear trend so that you can be able to plot your Fibonacci retracement tool. Then you will be able to see where the market is going, and you will be able to see where the market will retrace so that you can be able to take your next trade. So basically it lets you know the type of trade that you're going to take next, whether you're going to go down with it or you're just going to go up with it. Okay, so basically it gives you an idea of what's happening in the market. So like I said, you firstly need to establish the trend, whether being a downtrend or an uptrend. Okay, so for example, right now I'm just going to use a downtrend example. Right now I'm just going to draw some sort of a downtrend here, then show you how you need to plot it. Okay, then from there we're going to hop on the MetaTrader 4 so that we can do the live illustration, so that you can be able to understand how it looks like on the real chart. Okay, so now let's just suppose this is this is the current market. Okay, so this is the higher high, it made the higher low. Okay, then it continues on a downtrend, then it does something like this, then it goes down. So right now, as you can see, we on some type of a downtrend. So like I said, when you get to the charts, you firstly establish the trend. So right now, as we can see, this is some sort of a downtrend, so it won't look as accurate as it would on the real market, right? Because this is just a sketch drawn just for illustration. So yeah, what happens is, first thing first, you're going to need to plot your Fibonacci retracement tool. Okay, so you're gonna start it from the bottom if it's on a downtrend, right? So you're going to plot it from the bottom, then you take it up, right? So as you do that, there will be retracement levels. Okay, so this will be your zero level, for example, and then this will be another level. Like, there will be levels, it comes with levels, so this will be your 100 level. So here, let's say for example it's your 0 level, then here maybe it's 38.0 or 38 point something. I forgot the exact numbers. So here it's 50, then here is 618, right? So it's 618, then here is your 100. So here is 100. So for example, what I want you to understand is that you need to keep a close eye, or you need to focus too much on three levels, basically the levels of 618, level of 50, level of 38.0. Okay, so those levels are the vital levels, right? Because now, if you can see, let me just clear everything right now and try to make another example. Because what happens is, on those levels, the levels that I just told you about, 38, 50 and 618, those are the vital levels. So those are the levels where the market usually retrace at. So let's just say this is our tool, then this is our levels, this is our levels, this is our levels. Okay, so now let's say for example this is 38.0, and then this is 50, sorry, and this is 618. So what happens is, if the market is going down, right, remember, market doesn't just go down in a straight line. What market does is it goes down, up and down, up and down, but then the overall movement will be on a downtrend if that a certain currency pair is currently on a downtrend. So while it does that, if you can just notice, it will just come from here, then it'll go down, retrace on the 50, then it goes up and retrace on the 38. It goes down and break the 50 mark, and it can go all the way down, then go up again and retrace at 618. So what I'm trying to tell you here is that when the market goes down, it always come back up to retrace. So the retracement levels are those you find on the Fibonacci retracement tool. So those levels will actually show you where the market will hit or where the market will turn. Okay, so now let's just hop on to MetaTrader 4 and see what I'm talking about, since this is not clear enough. So I just want to show you how it looks like on a real chart, so that you can get a clear understanding of how to use this tool and how it works. Okay, because this is a very important tool, especially when you are still starting out with this forex journey. This is the tool that I also used, and it actually helped me a lot. I actually used it a lot and got a hang of how the market works, how the market moves using this tool. So now let's just quickly go to the MetaTrader 4 and see how it looks like on a real chart. Okay, so I'm not sure if this is my real account or what, but then never mind the balance, never mind everything that you see here. Those are my personal numbers. So all you need to focus on is how to use the Fibonacci retracement tool. Okay, so let me just see if I can portray. Let's take, for example, we taking USDJPY. This is just for illustration, right? So I'm just going to cancel off each and every line that I have here. I'm just going to cancel off everything and start everything from the beginning, from the very beginning. Okay, another thing that I actually forgot to talk about, to actually mention, is the time frame that you will need to plot your retracement tool, your Fibonacci tool. Okay, the time frame that I normally use daily time frame. I actually go to the daily time frame and see if I can see a clear downtrend or a clear uptrend. Then if I don't see that on daily time frame, then I continue to go to weekly time frame and monthly time frame and so forth. Okay, so obviously on a monthly time frame, I have to see where the market is going, or if I can't do that, or if I can see that on monthly time frame, then I will simply go to weekly. If I don't see it daily, if I don't see it on daily 4-hour time frame, I have to see it, or I have to see it on 1-hour time frame. Then if I don't see anything, if I don't see any trending market, it means that I will have to then leave that pair in peace and go to the next pair. Okay, but then the first time frame that I go to is daily time frame. So right now I came to monthly time frame because I wanted to remove all the tools that I had on the screen, the horizontal lines and the trend lines that I had on the screen, because right now my focus is on Fibonacci retracement. Okay, so let's just hop back to daily time frame. But then this one looks like overall it's on an uptrend, but then okay, we shall see, because I see here okay, let me just activate this so I can just show you what I see already. Okay, this is what I already see. So this is basically an uptrend. The market went down, went up again, then went down to form some sort of a double bottom. Then it might just go up, but then this is not what I'm here for. I'm here just to show you the how the tool works. Okay, so I'm just gonna quickly hop into daily time. See, let me just try and see if it'll show when I portray it. Okay, all right, it looks like it's on an uptrend. Yeah, it looks like it's on an uptrend. So let me just go to daily and see. Okay, daily time frame says otherwise. It says a downtrend. Okay, but okay, since well it says two different things, let me just go back to monthly time frame. So as you can see, this is our lowest point and this is our highest point. This here is our lowest point and this here is our highest point. This must be at a retracement level. So I'm just gonna wait, and I'm actually just gonna plot the Fibonacci and see if indeed it's at a Fibonacci level. Okay, so let me just clear everything and go back to tools. Okay, let me go back to tools and scroll down. This is our Fibonacci retracement. Let's see, since well we anticipate that it's on an uptrend, let's start from the top and see. Okay, so I've just put it at the bottom. Let me just rearrange it, make sure that it's right. So boom, this is what I was talking about. Remember the levels that I was talking about, 38.0, it's actually 38.2 and 50, 61.8. So those, like I said, those are the vital levels. Okay, so I'm just gonna plot my horizontal lines at 100, which is the highest point, and I'm going to plot another one at the lowest point, which is 0, and I'm going to plot another one at our retracement level of 38.2. So okay, 38.2, and I'm going to plot another one at a level of 50. I'm going to plot at the last one at the level of 61.8, and let's see how it plays out on a smaller time frame. As you can see, like I said, this part here was was with no doubt a retracement level. So you can see that it is indeed a retracement level of 50. So that's why you then take your trade when it's like that. Let's say for example, let me just remove, okay, let's say for example you saw this trade here, all right, and you want to actually get into this trade. Okay, let me just quickly zoom it in. Let's say you saw it here, all right, you just saw it here, then you want to go in, but then you're not sure where exactly are you going to enter, since well you saw that it's an uptrend. So you wait for it to go down so that it can give you this high before you can plot your Fibonacci. So once you plot that Fibonacci, it'll give you this retracement here, this level, it will give you this level. So once it gave you that level, you know very well that, okay, since well this is our level of retracement, I'm waiting for the price to come to this level before I can shoot my short. Okay, but then you don't just blindly take your short, you don't just blindly shoot your short. What you need to do, you need to always wait for a confirmation and some sort of a reversal pattern in a form of candlesticks. It can be a hammer, it can be a pin bar, it can be bearish engulfing, you name them. So you need to also do your research on different candlesticks. There are different candlesticks of reversal, so you wait for those kind of candle to happen, and when it happens, it has to happen on your retracement level. So it can be a retracement level of 50, it can be a retracement level of 61.8, or it can be a retracement level of 38.2. okay, but then the fact is it has to be on your retracement level. Okay, so now that we see here at level 100.891, this is our retracement level, and we see some sort of a double bottom. If you can see here, we see some sort of a double bottom. So here is the first bottom, here is the second bottom. Look at the type of candle that happened there. What kind of a candle is that? So that's a reversal candle that I was talking about. So you need to wait for this type of candles before you can shoot your short. Okay, and once you shoot your short, you need to then put your stop loss underneath the level of 61.8 or underneath the level of 50. So that will be your decision, but then you need to make sure that you put it underneath the levels. Okay, so I'm just going to quickly switch on to lower time frame and see how it plays out. So right now we on monthly time frame. Let's see the weekly time frame, how it works. Okay, we are more focused on the level of 100.891. so as you can see here, and the same thing happened here, and is about to do a triple bottom before it can basically shoot up. So our target in this case, we're going to firstly target this level 107.096 as our first take profit. Then the second take profit, we're going to target this level, then we're out of this trade. Okay, so I'm just gonna quickly switch on to even lower time frame, which is a daily time frame. So on daily time frame, it looks like we are going up. However, we still need to see the market retracing back to this level, retracing back to this level before it can basically go up. Okay, so as you can see on a daily time frame, what you can also do is you can also plot these trend lines. Okay, so it basically shows you where the market might go next. Okay, but then this is a topic for another video. At the moment, we are talking about the retracement levels, the Fibonacci levels, how to use the Fibonacci tool. Okay, so I'm just gonna cancel off everything. As you can see right now, what we're waiting for the market to do something like this, then go up. So like I said, this will be our first take profit, then going up will be our second take profit. Okay, so let me just quickly switch to 4-hour time frame and see. So here basically it's still going up, but like I said, we just waiting for one thing to play out. We waiting for the market to basically go down to our level, then continue going up. So basically guys, this is how you plot your Fibonacci retracement tool. Then you are able to know at which level the market will retrace before it continues with its original trend. And one important rule that you need to take into consideration is that never trade against the trend. What they say is a trend is your friend until it bends. Okay, until that trend bends, it's still your friend. You need to keep it with you wherever you're going. So make sure that each and every trade that you take, you need to take it along with the same direction of the trend, because if then you're going to do it, you're going to do the opposite of what the market is doing, then you will get banned and it's not going to be nice. Okay, so that's basically about it. So this is how you actually plot a Fibonacci tool. Or just to add it, just to add on, as you can see, here on a lower time frame, you can still do the same thing as what you did on a higher time frame, just to get a clear understanding of exactly where the market is going, because there are too many manipulation in the market. Remember, forex market is never 100% and will never be 100%. So you need to make sure that you check all sides. Okay, so for example here, what I see is I'm seeing a clear uptrend. Okay, so I'm seeing a clear uptrend. Let me just do it again. I see a clear uptrend. So the market went there, then the market came back to retrace, then the market went up again. So what I can tell you is that this level here, or yeah, this level here, it's a level of retracement. So I'm just going to plot my retracement level Fibonacci tool and see if indeed this level was a level of retracement. So I'm just going to quickly plot it and see if it plays out. So if it doesn't play out, like I said, forex is not 100%, so you'll just have to forgive me for it not playing out. Okay, so let's just quickly go and grab our Fibonacci tool. There we go. So like I said, it's on an uptrend, so we're going to have to then start plotting our Fibonacci tool. Sorry about that, I was stuck a bit. So we're just going to plot our Fibonacci tool from the top. So this right here, okay, what am I doing now? Okay, so this right here is the previous high, is the high that we had before we could have this one, and this one is the low that we had before we could have this higher low here. You feel me? So yeah, just to get a basic understanding of what I'm doing here. So now let me just go back and grab my Fibonacci tool again, and plot it from the previous high that we had before we could have that upper one. So let's see if this indeed was at a retracement level. Okay, so what we do is we plot our horizontal line on the 100 level, and we're going to plot it again on the 0 level. Then we go and plot another one on our 38.2 level. People are actually taking this tool for granted, and this tool can make you a lot of money. When using it, you need to be very careful and you need to trust and believe in it, because it really does work. As you can see how accurate this is. These levels that I was talking about, those levels are actually Fibonacci levels. guys. I'm talking about this level. Remember, I'm talking about this level. And one thing that you also need to take in mind is you can't just rely on only one touch on a level. You need to go back and see if that level is indeed accurate, or is indeed a supported level, or a level of resistance. But then in this case, this is a level of support. As you can see, the market or the price respected this level here. It respected this level again here. I'm sure if we can just go back and check, you will see that this line or this level has been respected multiple times. If you can just, okay, let me just zoom in so that you can see it. If you can just have a look here, what the market did, the market respected that 61.8 Fibonacci retracement level, of which is our golden zone. Okay, so as you can see, it does respect, and it did respect the line, the level again here. So what this means is that this level is very accurate. Okay, and it's a very a strong support level. Okay, so it shows here that it retraced, then the market is going up. So we could have, let's say for example, you saw this trade, or you saw this setup here. Let's say you saw it here, then you would have just plotted your Fibonacci from here to there. You feel me? Then you would have seen that the market will surely retrace at this at one of these levels. So you would have targeted your take profit from these levels. You would have targeted your take profit from this level, from that, and this level, and that level there. So your take profit would have been hit 3 times. As you can see, the market went straight up. So what is happening at the moment is we are expecting, as you can see, that the price is currently there. I mean, the price made that there, then it's currently here. So what we expect the price to continue doing right now is for the price to go down again, then retrace. Okay, then if it doesn't play out, if it doesn't do like this, then the price has to plummet. It has to plummet down to our level of resistance, I mean level of support, okay, that we saw on a higher time frame. So guys, that's all about it. That's all about it with the Fibonacci retracement tool from your boy Letabo Mampana. Peace. Make sure that you do click subscribe button for more videos like this, and leave a comment. Also make sure that you like the video. If you did get value out of this video, it's for a YouTube algorithm. So make sure that you hit subscribe button, hit the like button, and also leave a comment telling me how valuable this video was. Thank you very much from your boy.